Thanks, Steve. We have a great lineup today. I'm really excited to have this quality of talented people here. And just briefly, we've got Michael Barrett, CEO of Google AdMeld. We've got Brian O'Kelly, CEO of AppNexus, Brian Silver, Chief of Right Media, Vadim Telyanakiev from OpenX, and Joe Zawetsky, CEO of MediaMath. Thanks, everyone, for being here. You know, when we think about real-time bidding, that phrase is used over and over and over and over and over. I mean, is it just a overhyped phrase, or is this really the most significant technology, you know, in the last few years? Joe, kick us off.
It is the most significant thing that's happened in the past few years. Look, I think the reason for it is it's not necessarily about the plumbing. I think, you know, there's a lot of talk about what it does for workflow and efficiency, and I think really the notion of programmatic, sort of defined broadly, is really about what you do on top of it that matters. So it's finally the opportunity. You know, a lot of these panels today that I was sort of listening in on, there's a lot of talk about, you know, the share of people that are sort of middlemen taking parts of the same dollar. And then I think the real opportunity for programmatic and for RTB is one, yes, to make it a more efficient pathway from buyer to seller, but more importantly, it's for buyers to communicate what's valuable to them more effectively, like on each individual impression, and be able to go in and say, look, rather than having to pay $2 on average for a bunch of people that all kind of look the same because I can't identify who's valuable and who's not, I can go and say, I want this tranche of people, 1% of the audience, and I have a willingness to pay $50 or $100 for that. So ultimately what it does is it makes the whole system work better. More dollars go into the chain, and ultimately the supply chain, the complicated Lumascape, can thrive in that environment because RTB enables buyers to communicate value more effectively than you ever could before. You certainly can't do that with a fax or an IO, and that's why it's interesting.
Vadim?
Sure. So I think as far as background, I started lifting in. Before that, I was my yearbook, and I was a publisher. And we had 3 billion impressions to sell, and about 300 choices in terms of ad networks. And what we try to do is predict and try to figure out who to sell that impression to. I think the reason a lot of SSPs started out is to solve that problem, and the reason RTB got adopted so quickly is because it was even focusing a technology to manage and predict the networks, it was still very inefficient. And the heavy adoption to RTB is to solve that problem, and I think it works very, very well. It's, instead of creating and managing tags and predicting across what literally could be tens of hundreds of thousands of tags that you're trying to do this for, you just connect with all the partners, focus on the integration, and then it starts working. I think that's beautiful, very elegant, and really powerful.
I mean, tell us, Brian, with all the technology that's going on here, are we missing any of the components for what we're actually trying to achieve?
No, I don't think so. I want to compliment what Joe said a little bit. When he said that RTB is important, I agree with that. It's an establishing of a new currency, one that's been around for a while, but people are now starting to recognize as a currency. But it's really what you do on top of it that matters. And so, depending on which side of the equation you are, and you want to make sure that you're being effective, having additional audience sharing capabilities, having the ability for you to maximize yield through some of our tools, that's really what kind of happens on top. But what I think is really, really important, though.
I mean, why do people care about RTB, Brian?
I don't know. It sounds fun.
Yeah, right? Race to the bottom?
I don't think so.
If you think about it, no. So it's not a race to the bottom. Then where do you see CPMs? Why are we seeing CPMs lift faster? Yeah, and how much are CPMs lifting on your exchanges?
I don't know. I mean, you're asking questions about things that I can't answer. So from my perspective, CPMs and RTB are orthogonal, that publishers have capabilities to choose their CPMs. They can choose the business rules they want to implement to drive whatever yield they want to. We're talking about technology here. No more than having a calculator makes you better at math. RTB doesn't make you better necessarily at valuing media, either as a buyer or seller.
Shouldn't a more efficient exchange allow price to come through?
In a textbook, yes.
And is that not happening out there?
Do we have a more efficient exchange?
Well, that's give us an answer on that.
I can't.
Okay. All right. So, well, let's just move on then. All right, I mean, Michael, your whole basis is about improving and getting more value out of these page views for publishers, right? So talk to us what you're seeing out there in terms of the lifts that are being able to be achieved.
I can't answer that. No. No, we see it. Listen, I think going back to your original question, is it the greatest thing since sliced bread? And I would say that it has the potential to be. Right now, it's early stage. It's created more efficiency in the marketplace, not from just a price standpoint, but mostly from operational. It's created greater targeting capabilities, as Joe pointed out, in terms of buyers bringing their own data and being able to hand select which impression they want. And I think that those, in combination to some of the other benefits, it has the potential to bring in and unlock digital dollars that we've been chasing forever and keep alluding to. Man, those marketers are so stupid, they don't see all these consumers using the internet, yet we as an industry made it pretty damn difficult to buy internet ads, and it's making it a lot easier. So I really do think it has the potential to grow into a whole new way of buying and selling digital media.
So where do you think we are in terms of getting price efficiency right now in the marketplace?
Well, what we see is there still is more supply than there is demand seeking it. And that has led publishers to manipulate the auction through price floors because they perceive that their inventory is not being fairly judged in the marketplace because there's just not enough bids on it. And if the number of bids trebled, well, then price floors would be a thing of the past because a true equilibrium is being established. So I think we have excess supply right now, and that's why you're seeing price floors and other manipulations.
The only thing I want to add is, the assumption when everyone talks about RTB is that that this equilibrium state sort of occurs, that it occurs because the technology exists. And the reality is not every impression is created equal, nor is that impression, if I'm a brand advertiser, then, and even if it has the same audience metrics against it, may not be the same, value that if I'm a DR advertiser, with the same metrics. And so, to me, it's about, allowing enough understanding of what that impression has against it as a marketer and allowing the true value then to be perceived by them. And as long as they're getting the value that they want out of it at that price, then I think RTB is an enabler to help get there.
And that's a question about sort of the data associated with the impression. But do we need external data to help value that impression as well?
Yeah, I mean, so what do I think? Absolutely. I think that you in control with your data and the ability for you to utilize your first party and third party data however you see fit, and then allowing a value of an impression then to be maximized based on that, I think is absolutely the way to go.
I mean, Vadim, where are we in this maximization of pricing for these impressions? Are we way off, or we've pretty much got it honed in?
I think it's working. To add to Michael's point, it is early, but every single publisher that we manage uses RTB in some fashion. So if it's publishers that don't, so then it all becomes about a level of control. So for some of the publishers, 50% of revenue, 60% of revenue comes in from RTB. Others are more careful with it, and where we're trying to get the ones that embrace it more or kind of embrace it early are the ones that have smaller sales teams, or maybe they don't have sales teams. So for that channel, it's incredibly powerful. It works, and because traditionally that's what they used networks, and this is the lifeblood of the publishers in terms of the revenue it generates. For the publishers where that might be a conflict, I think it's just about controls. The first 2-3 years we created this language about how technology companies can communicate, and I think we did that very well. A year ago, maybe a year and a half ago, is when we started thinking about pricing private exchanges, which to me is really just controls on top of RTB. And as those things evolve, we're going to reduce and kind of just build the things that are necessary for those publishers to feel comfortable.
I mean, Joe, as we become more efficient out there in the marketplace, do we pull more dollars into the total system? Or do we actually find marketers are going to be able to do more with less?
Well, luckily, marketers are rational in the long run. And I say that because it does sometimes take a cycle or two for people to reallocate budgets. I mean, there is something that's working, you put on the gas. right? You realize that, hey, I used to put in $1 and I would take out $1.50 and I could do that for $1 million a month. Now suddenly I can put in $1, take out $2, and I can do that at $4 million a month. People make the rational move. People like selling stuff, and that's where sort of the economic theory plays in here. So as long as you get 2 cycles in and you can prove the results to a level of care that a CMO ultimately can bring it to a CEO and the CFO to say, look, I can really prove that this thing works, then in fact you do see the downstream effects of people putting more money into the channel. So that's really what this is about.
Yeah, and I think practically speaking, those advertisers pre-RTB were limited to the number of sites that they could buy just because of the mechanics of buying. And now you're seeing that they're buying much deeper in terms of number of sites. Maybe the top 20 sites that they were buying before aren't getting more dollars, or they're even seeing decreased dollars. But it's more dollars spread along many more publishers, which is good for the whole ecosystem. And then you have the convergence of tablets and smartphones, and that's always been a bear for publishers to try to sell because it's siloed, the buyers are siloed, and you're seeing the early stages of campaigns addressing multiple platforms, which would be not possible without RTB.
When you look out in the adoption right now, where are we in terms of the adoption cycle for real-time bidding, and what percentage of total budgets are flowing through, and why hasn't it grown to be a bigger market yet?
I think Brian and Joe are probably a lot more in a much better position to address the buy side because we focus much more on the sell side. But from a sell side, if it's not 100% adoption, it's 99.9. So it's fully adopted on the sell side. So I don't know what.
But sometimes it's just as an overflow mechanism, right?
Oh yeah, I'm not saying that it's
so why
replacing premium direct.
Why hasn't it?
Oh, I think that's an evolution. I think you talk back to the early days of anything, and the early days of RTB is not unlike anything where the initial advertisers that are willing to try it are generally performance-based because they're less environment sensitive, and if it works, it works, and they're just going to plow money into it. It takes a while to move it upstream, and frankly, it's not just a buy-side issue, it's a sell-side issue. You have to differentiate the inventory, and if they could buy it for $1 and then all of a sudden you say, no, it's $3 now, they're going to go elsewhere, and so you have to figure out a way to differentiate the inventory to track brand dollars and higher CPMs.
And do you always see a role for a direct salesperson?
Yeah, no question. Okay. Do I see a role for as many direct salespeople that are deployed today? That's another question.
All right. So Brian, jump in here. Right? What do you got to say?
Very dangerous. Well, first of all, I'd like to propose a new acronym today.
Just what we need, Brian.
I know. Well, Joe, you said before you wanted something fun, so I think we should take the RT out of RTB. Let's just talk about bidding. Because real-time bidding is sort of a given, right? Are we all agreeing that bidding is always RTB? And we say it so many times a day. Why don't we just say B? I think AppNexus has one of the best B platforms, maybe B+ in the entire industry, right? I don't want to fight about it, B- if you'd rather. But I think that really bidding is the big revolution we've all seen. We see it on Facebook. We bid for Facebook ads. We bid for search ads. We bid for display ads. If there's one thing that's changed in the past 5 or 6 years, is the fact that we're thinking about bidding and thinking about bid dynamics as a mechanism for buying display. So for me, the question is, why isn't more display inventory biddable? And I think there's pure economics that make that conversation interesting. And that's why the discussions of CPMs and efficiency and all that, this is not really an efficiency question. I think the supply-demand questions are much more interesting. So I have some questions for the panel that I brought with me. So if indeed we think that...
Nice job, Colin.
You shouldn't give me a
I'm ready for this.
Direct the first one, Colin.
He's looking at a 26 minutes to go clock.
I know. I could talk for 26 more, but I'll go quick. So my first question is this. So price floors, second price auctions. I'm actually really curious. If we go down the line here, especially on the sell side, folks, what is the default mechanism for price determination on the sell side? Right. I'll go first. Pure second price auction. Not even a penny more. Pure second price auction. So Brian Silver, if someone bids $10 and someone else bids $1, what is the mechanism by which you determine price? At Right Media.
That's a good question.
Thank you.
So wait, I want to follow up on what you said, though. So the acronym of B, right?
Yes, B.
Right, I actually
For
think
Brian.
it should be ABCs, because that's what we're
Just
doing
B,
right
or
now.
just B?
Well, we've already been, right?
All right.
I think it's ABCs. So what do? We use second price. And we use second price as a way for us to make sure that there isn't an outlier out there just to bid once, that we do equilibrium through a second bid.
So if the $10 advertiser bids $10, you will charge them $1.
In that case, yes. Since you're being literal, I'll be literal back. So what do you do
I'm a
today?
buyer, and I think that's okay. I literally think it's, as long as the mechanism is disclosed, I think people should use whatever system to help maximize or monetize the sell side, right? This is a buy and sell side market that actually requires both people to be successful, right? And so to the extent that buyers exploit the system such that publishers don't get their fair share, it's bad in the long run, right? To the extent that sellers exploit the system such that they take more than their fair share, buyers through the system in terms of what are costs, what does the modeling look like, and ultimately whose interest are you serving. And once that's factored in, everyone can do their jobs.
So lowest price is possible.
No, I mean, listen, between the two Brians, aren't you going to have the same algorithms over time? Like, aren't they going to converge? Don't people want to have that type of, simplicity and transparency in the
Just like Wall
marketplace?
Street.
Well, that's how we differentiate in the sell side, is we do everything we can to be as undifferentiated as possible so that publishers can really choose from any of us with no difference. I mean, that's actually the point of algorithmic buying, right?
Yeah. Right?
No, it's not the point. We'd all be out of business. You're supposed
No.
to grill us. If we say we're all exactly
Well,
the same,
you are
what
all
these
commodity.
poor people
Ultimately,
gonna
this
hear?
is the whole point, right?
Exactly.
So, and how are you going to distinguish yourself, right? Yeah. So
I don't
Facebook, right? It's the ticker's FB. What exchange is it trading on?
I didn't know that was the ticker.
Well, the ticker's FB. So what is the exchange?
Fantastic.
You added an F to your B, Brian.
Yes.
I think it's NASDAQ, but that is the right point.
Right. So it is the Nasdaq. But the whole point is that it's normally people think, oh, it's two letter. It's a nice traded exchange. But people don't necessarily care what they're buying on when you're looking at equities. You don't say, oh, I bought it on the Nasdaq versus the New York Stock Exchange. So how will you ultimately differentiate yourself over the long term?
No, Colin, I actually disagree with you, and maybe I'm jumping right into the pit, but I disagree with you. I think that there are, what we talked about in the beginning of the panel is RTB this revolution, right? And the answer is it's a really good thing, and it's good for currency, but there's lots of other things around it. It is only about the currency in which the value of that impression. When you take, either it's, any SSP and you allow there to be price flooring mechanisms in order to protect yield, right? There's a differentiator point. Who does that better than somebody else? On the DSP side, it's the ability for them to use more and more sophisticated, bidding technology in order for there to, allow them to maximize, their return for their advertisers. And then there's players like us who sit in the middle who are not a principal in the transaction whatsoever and allow more and more of the sophisticated. You want to find the 5 people in Chicago who are trying to get to Moscow. You're not going to be able to run a very large campaign on that. But if you go to somebody who sits there and shows you that audience attribute, at this price is worth something at scale, then you'll put more and more money to work.
Can I ask, when did commodity become a bad word, by the way? Like
It's not
air
a bad-
is
it's
a
not a bad-
commodity?
it's not a bad word at all.
Gold is a commodity?
Wasn't there
I think
an
it's
auction
fine to
bar
be a
yesterday?
commodity, right?
I'm not
As
sure
long as you're
air
one
is
of 4 or
commoditized.
5.
There's all kinds of flavors of air. I saw a picture of it. There was an auction in bar.
Oxygen-rich air.
Just to add to Brian's question in terms of the second price auction, I think second price auction works as long as there's enough demand bidding. So if there's enough competition in the market, the theory is that the advertiser will bid what it's worth, and then it's going to clear at the most competitive price. But what happens is, even if you say in the overall RTB environment, there's a lot of liquidity, buyers are looking for very, very specific segments. And when you start drilling down to the segments, in a lot of cases, actually not a lot of liquidity because maybe only one advertiser might actually feel that this is a very important user because they're using data that's kind of proprietary to them. So I think the piece that becomes important on supply side is helping the publishers, and it's one of the things we focus on, value the inventory based on the data that they have to make sure if there's not enough liquidity in a second price auction that they're properly essentially setting up a dynamic rate card and properly opening up and setting up the floors around the bidding in the market. So we do that leveraging the data that's out there. We also just do that leveraging the network demand to manage. So if we know there's a network that's out there that's willing to pay $5, and we can predict that for that impression, that becomes the floor and that becomes the value of the impression that gets to compete in the second price auction.
So my question is simple. Does your system guarantee maximum yield for publishers?
Guarantee, well, that's all we focus on.
So why does OpenX give guarantees to publishers and revenue if the system works?
Why does OpenX give guarantees? And
OpenX came out and said, we're a network, we're going to give guarantees to publishers to get you to give us all your supply. But if the system works, why do you need to give guarantees?
Sure. Well, what happened is when SSP started, the main pitch was, hey, we're going to generate more revenue. And I actually saw this when running Liftina as well, that we have proven data. That's when we come in, that's what we do. But it took a very, very long time to convince a publisher of it. So a guarantee is really just a quick sales tool to say, hey, we actually believe that we can do this, and we're putting a guarantee in front of it. So to me, it's just a sales, it's a tool for sales to shorten down the process instead of going through a long process of convincing publisher sales and then their ad ops team that this truly works. We're just going to say, hey, this is what we think we can do. We're going to guarantee it and then deliver on it.
So how many of your publishers, once you've given them guarantees, once you prove it works, do you take the guarantees back off?
So it's a lot easier for me to speak on the Lyft side, because, but there hasn't been a single publisher that we've gave guarantee or gave guarantee of a floor that is not with us today.
Well, that's because you guaranteed their revenue. I'm asking, how many times did the revenue guarantee go away?
I'm saying, how many times the revenue guarantee?
Yeah, I mean, so my experience is, and I've been doing this for a
Why
while.
why would a customer want to take the guarantee away when they already have it? Even if they're getting maximum yield, why would they want to remove it?
Well, so let's do that question. So if I say to you, I'll guarantee you a dollar CPM, or I'll give you maximum lift for free, which one would you take?
Well, I mean, typically what you want is both.
Everyone wants everything. I'm just saying, I'm asking the question, which is, if it's truly a sales tool that once you actually get cranked up, you're going to see better lift than the guarantee, how many of those people end up saying, whoa, I'd rather get maximum lift as opposed to the guarantee? And this is a fair question, because I think for a couple of us on stage, we don't give guarantees to publishers in this way. And so if this truly is going to be a game about best technology and efficiency and things like that, it's a fair question to ask, which is that truly a sales edge, or is that something that actually is a fundamental business model, which is the only way to compete is to guarantee revenue to publishers, because that's an ad network.
Well, but listen,
so on the lift guarantee, if we double your revenue, we're going to charge you more. A year later, every single publisher came back to us and says, you know what, I see that you've been charging us more because you double, triple our revenue this time. How about we go to the deal structure that you originally proposed? That's not a guarantee, and that's a split revenue share. So they do eventually go back, and it's just a revenue share.
Michael, what about guarantees versus yield?
Yeah, I just think it's a tactic. I mean, if you work for a company that has a balance sheet that has money to swoop up inventory exclusively, and you do it correctly, which is use it as a floor and say, I guarantee $1.50, and if we bring in $1.75, you have nothing but upside. If you come in under $1.50, it's all my risk. And you, going back to your point, I think you can decommoditize an exchange by getting the kind of publishers you want, and if some of it means you're giving out guarantees, but now all of a sudden you're attracting different types of buyers that are willing to pay. It's kind of a bird of feather effect that we see at AdNode all the time. They're paying much higher per bid, per bought impression on the platform because of the perception of buyers that there's quality, it's transparent, it's top name brands, and how you go about securing that, I don't think it demeans the efficacy of biddable media.
Is this an industry that does? We talked earlier about commodity, right? But maybe the word we want to use is scale. I mean, what is your view in terms of how many players, ultimately, does this industry want to evolve to, on each side?
Be honest.
One.
One to rule them all.
I think, like anything, you're going to find.
I think there will be still room for Google at the end. No, I'm serious. Good. Okay.
Yeah. So we'll edge in on the corners of AppNexus's world domination. But look, there's going to be a handful, right? Like anything, you find that even though the APIs are generally all standard, about where they're going to place their inventory, and you start to find this coalescence around folks that have the kind of inventory that people want to buy.
I mean, and then Brian, when you look at the landscape, do you have any view on how Google is taking both sides, and do you feel squeezed at all by that?
I mean, the most squeezed I've felt recently is sitting between these guys. Being between Yahoo and Google on a panel. I mean, we're all large men, so it is getting tight up here. But you guys can't feel the lights. It's hot. So I think that there's no problem. I mean, all three of us are on both the buy and the sell side, and there's a ton of efficiency and scale advantages, as Michael mentions, to being on both sides of the equation. And we've seen this in the history of media: is aggregating as much supply and demand as possible creates efficiency for both sides. And so I think the question is really this, which is, if you're only on one side of the equation, and I'll point at Joe as a great example. Joe just hired a VP of Publisher Solutions. So I'm curious, Joe, are you now going to have to be playing aggressively on both sides of the equation to survive in a world with big, handsome men like us operating on both sides? And you're big and handsome too. Very handsome, I'm just saying.
Look, I think the important thing is knowing who you serve, and I do think that playing both sides actually makes that a difficult answer in any organization, regardless of the number of of firewalls. We are firmly squared on the side of how do you provide a transparent buying platform for buyers to communicate what they really care about, and to the extent that you own inventory that has a different profit center than otherwise, I do think it creates conflicts. It may be the right short-term answer because liquidity does need to go into the system. And I think Wall Street and finance have a similar set of migrating roles that may well be a necessary short-term answer. I think in the long run, the market will demand accountability in terms of who you serve and, again, where your compensation comes from. We are finding it necessary to spend more doing it with PubMatic, doing it with Rubicon, basically everybody that has private exchange capabilities, where what we're trying to do is really communicate, hey, we've got a portfolio of really, really good 1,000 brands, 55% of the Fortune 500 that are looking for inventory that isn't showing up in the open exchange. To the extent that we can provide that value back and forth, we think it serves our advertisers better.
I mean, let's jump in on that, right? I mean, where should inventory? What about the notion of private inventory, right? And don't we want to have all inventory ultimately available across exchanges? And isn't that going to be the most transparent and best solution for advertisers and for purchasers of this inventory?
It is, look, but I think the long run is made up of a series of short runs. Yeah. Right, and I think for people to think we're going to wake up and the market is going to be wildly efficient tomorrow, where you can walk into a publisher and say, look at this wonderful exchange, go put all 100% of your inventory on there. I think the burden of proof is on the people in this room to prove it. And the way that we prove it is we put dollars into the system at higher prices and better yields, right? And it works better for marketers, and publishers, capture more. We just have to figure out the steps it takes to get there. I will say, and I feel fairly passionately about this point, as folks might have noticed, we are well past the tipping point, right? For a long time, the pit broker and the stock exchange thought, this is the best job in the world, and then 5 years later, there were like 4 pit brokers and a bunch of computers sitting inside the major exchanges. I think we're at that momentum right now, and I think again the pace is really, really rapid to the folks that are in it. I think 5 years from now, not just RTB, not just digital marketing, but like the practice of marketing looks radically different. And I think that to tie back to the first point, that's really what RTB is all about. It's about the first time we sort of get to that marketing looks like science as opposed to just pure art.
Just say B, not RTB.
Yes. Just a quick on the private exchange scene. We sold some of the earliest, and we still have a huge roster of private exchange clients. I think we've seen a migration already with private exchange folks, and that generally speaking, the use now is for that elusive, secondary premium, indirect premium, call it what you want, but maybe a CPM band range of $3 to $6. And if you're looking at your tiering of inventories, the direct sold, this middle band, and then the traditional remnant, that there's a growing sense of comfort that perhaps a big exchange with bigger liquidity makes more sense for remnant, and they all, ours included, are coming up with tools that Joe, et cetera, on differentiated inventory at different prices than you would find in a normal exchange environment.
So we've got about 10 minutes left, and what we want to do is we want to open it up and see if there's any questions in the audience for any of our panelists. We've got a microphone.
I'm Bridget Williams with Business Insider. We just signed up with the SSP. We're looking at private exchanges. I'm talking to the direct sales guys. We want to create this middle band. We want to create differentiated inventory, but what is that in practicality? Is it prime time? Is it section targeting? What do I offer these people in this nice, happy private exchange place that makes them want to pay more than what they're getting through the RTBs?
I mean, I think those are all the right questions you're asking, and I'd be completely lying if I said I knew exactly the dynamics of your specific site and what you need to do, but I think that kind of hits on it, and that is each site is different. We have clients that have successfully done this, but it means in some cases they're transparent to the URL level on their private exchange, but they're not transparent to URL level on the other sold inventory. Sometimes their inventory is not available anywhere else. It's always above the fold. It's always a certain ad unit. It allows rich media. There's a lot of different tactics you can take, and you got to kind of, along with your partner, your SSP partner, find that out from the buyers. What is exactly that they're looking for? A client of ours, a magazine company, only allowed folks access to their private exchange if they bought more ad pages that quarter. So there's a lot of things you can do to tie it in. I think a lot of it rests with what your particular business goals are for the private exchange.
I mean, to me, this is...
Put Henry Blodgett.
That's exactly right. You know, devalue communists like Blodgett, right?
I mean, to me, this is exactly the point, right? So each one of your companies has to continue to grow out of that, and that, you know, there will be several marketplaces that win on a global scale, and I think that that's where, you know, you're going to see things, you know, occur over the next 2 to 5 years. There will be a couple of marketplaces left, and those marketplaces will have enough solutions to handle the scale of each of your businesses.
And that's actually, I think, the role of the salesperson in a world of programmatic is in this private exchange world where technology's underneath. It's really a question of, like, how do you create packages that make sense, right? Like, how do you look at that and say, hey, I want to create a package of business insider information. I want to provide lower, you know, higher up in the frequency curve. I'm going to give you a premium sponsorship in addition to a lot of the, you know, the private marketplace stuff. And that's actually how you bridge the two worlds. That's the middle tier.
I'd like to tell a quick story. Once upon a time, there was a news site, and they went to this conference called OMMA Ad Networks, and there were a bunch of ad networks on stage, and they stood up and they said, hey, why should I choose your ad network instead of somebody else's ad network? And all the ad networks gave really compelling stories about all the things they do that are different, and they said, well, there's a lot of different ad networks to choose from, and the person said, well, here's what I'm going to do. I'm going to daisy chain between a bunch of these ad networks so I can get the best of each. And so then that was like 8 years ago. Today, the exact same question is simple. I'm going to go call these ad networks SSPs, and I'm going to stand up and I'm going to daisy chain all of the SSPs. I'm going to go to AdX, then I'll go head over to AdMeld, and then I'm going to go to get something from maybe somebody else, and I'm just going to go down the chain. And it turns out that all we're talking about here is the exact same thing. We're talking about liquidity and aggregating supply and demand and how a larger pool of supply is better for buyers and vice versa. Nothing has really changed except that a small portion of these impressions are being cherry-picked by a liquid pool of audience. So I don't mean to discourage anyone here, but if we're going to talk about this, let's talk about this for what it really is. Nothing really has changed except for a very small portion of inventory that's being cherry-picked off via B for audience. The rest of it, I know you guys have the direct sales force, you can maximize the value of my inventory. You guys work with AppNexus for some RTB, so you'll cherry pick off that audience at very high efficiency. And I'd call Vadim and say, hey dude, you know, can you give me a better guarantee, and does your sales force and your video and your rich media and everything else compete with collectives? Oops, they don't. So really what we're looking at is Google, GDN, is a $5 billion ad network. Ad.com is a $1 billion ad network. There's nothing wrong with that. I am jealous as all hell, I said a bad word, of all hell of what, you know, what Google can bring to the table. But why you wouldn't sign up with one of these full service providers and you would go to somebody who can't actually stand up at that level really bewilders me. So my advice is simply find one provider who has the full range of offerings, and, you know, some of us like me will just sit there and provide the piece of that we're best at. But that doesn't seem like it's changed all that much in the past 8 years.
It's quite a compelling growth story.
Thank you.
All right, what else we got out there?
Glad I'm out. Wow.
Thanks. You guys didn't curse as much as the last panel. Fuck. Thank you. I feel
We're
better.
doing it on the inside.
Exactly. It's Howie Schwartz with Human Demand. So what about mobile? I know we're going to be talking about mobile this afternoon, but I'd love to hear from the vendor perspective where you guys feel mobile is today and how much of an impact it's going to have on the RTB or B side of the business over the next 12 months.
It's starting to stick.
Yeah. Could I ask a question? Could anyone here who's not looked at some kind of internet web page or something on their phone stand up? Anybody? Anyone not have a cell phone? Anyone not have a smartphone? I'm not trying to shame you, but do anyone not have a smartphone?
Come on, stand up. Somebody's out there.
There's got to be someone out here, okay?
Spartan their Nokia.
Right. So I guess that answers your question to a large extent, which is content consumption is absolutely moving to phones. Now, I was at a conference recently and a lot of people stood up, but then they left. So I don't think it was actually my question. I think they were just offended I asked it. So that's my opinion is, if we as an industry don't solve some of the fundamental questions about mobile, then we're going to lose a huge amount of traffic as it shifts. And this is the biggest opportunity for any kind of innovative company is, can we solve the supply-demand gap in mobile? It is massive. There are huge
It's
problems.
only going to get larger, and it's exploding right now. I mean, what can be done about the amount of supply in mobile that's coming on besides just drive down costs to the bottom?
My plan is to panic, but I suspect others may have a better answer. I don't want to hog the stage.
Yeah, I think the biggest gap right now is that you're seeing a ton of it, and it's very liquid on RTB platforms. The problem is that targeting capabilities aren't translating from all the learnings from the digital display, and that's the real governor on price. Its supply is an issue. What we have to do is improve the targeting capabilities, and that runs smack dab into user privacy issues.
Yeah, no, that attribution is the big problem, right? I think people are seeing it now with Facebook as well. Like a market gets to be about 20% of page views or 20% of impressions, which case with both Facebook and with mobile now. And marketing spend rushes to catch up, right? Because in mobile, I think the stat is like 24% page views, smartphone enabled, 1% of marketing spend, right? So it's always been about the year of about to be the year of mobile. And the reason for it is you don't know if it works or not. Right, so sometimes the market's big enough that marketers abhor a vacuum, right? Sometimes if the eyeballs are there, they'll just find a way and they'll put dollars into it to test it. But now you're starting to see sort of the chickens are coming home to roost in something like a Facebook, where it was okay to be there just to put the dollars in, right? And now people are saying, well, what's the value of a like? I have to make sure I can connect this to what's actually happening in store. Let me understand this better. And that's when you really have to get the attribution question solved, right? You have to know how it's working within the channel, then you have to know how it works and impacts other channels. Mobile's is a thorny beast in that sense, right? In that it doesn't connect to web naturally, and people don't necessarily have the metrics. Very few people are actually buying on their phones, with the possible exception of iPad. And once that gets solved, then dollars flow very, very fungibly into channels. But we're still probably a couple years away from that. So.
Brian
Still
Silver,
almost
mobile?
a year of mobile.
Yeah, I mean, I was at a different event this morning, and what was really funny that I heard, or at least eye-opening, is people started talking about mobile, and then they started saying, well, they have a conversion issue, because the conversion actually happens off the phone, whether or not somebody's then in the store or whether somebody then goes to their PC to convert. And I just found it so ironic that this cycle has started again. We're just renaming what the boxes are as far as attribution. And so, Michael had it correct. It's all about targeting. It's the ability for us to use all of our data and the ability for us to then target on any of the 4 screens that exist out there, and the people that get to do that better, faster,